Hi, welcome to this video day, which is on the 21st of October. It's Monday. We're just going to be looking at a very simple trade setup today, which is one of our favorites, which, if you get it right, gives you really good risk to reward trades. You use a very aggressive entry against the prevailing trend, which allows for a tight stop. And if you're right, you should move quickly into profit and basically be able to move your stop up. Now, in terms of the trade setup, you will get a result very quickly, which means your money will work hard. In terms of your loss will come pretty quickly, and yeah, if you get a profit, that'll come pretty quickly too. So your money is working hard in the market. These setups, if we get them wrong, tend to hit our stop pretty quickly. But also on the other side, you'll come into profit hopefully pretty quickly as well. Now, in terms of the trade setup, I'm going to illustrate it on three lesser looked at pairs today, but they're probably on your trading platform. The trade setup can occur in any pair. But the pairs I've selected out today, USD against the Swedish krona, so USDSEK, US dollar against the Czech krona, or CZK, and finally USD against the Singapore dollar, USDSGD. Now, in terms of the trade setup, the logic behind it's pretty simple to understand. We really like it and we use it a lot. And just going to go through it obviously right now, but just before I do and we go to the charts, just do please keep in mind it is my view as of right now. It could of course change in line with the market conditions and action if you want. All our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you'll get live access to our member center. Right, let's go and take a look at the chart setup. We're going to look at first is USD SEK. USD SEK daily chart. Now, in terms of the USD, we're bullish in terms of all three of these pairs. So we view the longer term trend as up. But of course, you've had a decent correction, done a little bit overbought. We've now corrected. What we're looking for is a key institutional level to key off, and we're going to use Bollinger Bands to time our trade. Now, in terms of USD on the SEK, SEK has got really bearish fundamentals for us longer term. Dollar has the edge in terms of interest rates. US economy is doing better. SEK has just benefited from what's been a general dollar correction. Now, in terms of any trade, you're not going to get one-way traffic. Obviously, we base out here, we go up, correction, up, correction, up, correction, up, biggest correction on the chart. Now, in terms of doing the entry, let's just first of all look at Bollinger Bands first of all, which can help us time the entry. Those of you unfamiliar with Bollinger Bands, you've got a mid-band, which is a simple 20-day moving average. The mean price, and then the two outer bands indicate the volatility of the pair. If they're close together, the Bollinger Bands like here, you see you're traveling sideways, the candle's not too big. And then here, when you get a nice big move to the downside, the Bollinger Bands widen out. Now, in terms of when the Bollinger Bands become wide and the volatility high, you probably will not stay outside of an outer Bollinger Band for long. So you can see it here as we come down, we go outside of the outer Bollinger Band, back within. You'll normally go towards the mean price, the 20-day, although you can run band to band, okay? So out, back within, up and out, back within, up, out, back within. You do get out here, you don't get back to the mean price though. Go to a new high. Now big aggressive sell-off just at the outer Bollinger Band. Now we want a key institutional level, and we'll do this from our own research of what banks think, and you can do it yourself for free. The level for us is here, 960. This was a heavy volume candle when we reversed below 960 and then came back up, held big order flow, and these candles push up again there, again there. We think the same will happen again here. We've touched 960. There's no big order flow at the number, okay? In our view, unlikely to be sell orders beneath this tail. Yeah, the volume's dried up. We just bounced a little bit back. We need confirmation, obviously, to get in long. As we come down here, get to the outer Bollinger Band, out, just back within. So I'll draw a reverse trajectory in there. So we do not expect that level to get taken out. Stop could be tight behind those three tails, or back from those three tails. Now we need some confirmation to come in. Where are we going to come in? Not going to wait that long there. Come back in through Friday's close. If we're right and the order flow has dried up, you will get accumulation from buyers. Yeah, when I say buyers, I mean institutional buyers, and then we'll go back up. We think towards chart highs or two chart highs. Obviously, manage the trade as it goes. It should target the mean price. Okay. If we're right and we get blue through that level, it should follow through pretty quick and bring the stop up. It's an extremely aggressive entry. Okay. A lot of people do it just with outer Bollinger Bands going out and coming back within. I actually prefer to kind of research a key institutional level. In my view, that's my view of the key institutional level. We've touched it, come back to the outer Bollinger Band, come back within just a bit of confirmation, we should go up to chart highs. So yeah, very aggressive entry, good risk to reward if we're right. And I'll update all these three pairs at the weekend and see how they performed. Okay, now in terms of, we did go through 960, we fell through the level. I might just look for a failed breakout, come back through it with a stop behind that body. But this moment in time, going to come in on strength. Right, now the next pair we are going to look at is another really good looking trade setup. Well, they all are actually. It's USD CZK. Right, USD CZK, and in terms of this pair, I've done quite a few videos on it over the past few months, and lucky to get the turn there. Went up nicely for us, then travelled sideways. I think I stayed with the sideways actually a bit too long. We tied our money up, got stopped out, run on to the downside. Now, in terms of the CZK, we're just extremely bearish of it longer term, but it has benefited from an overall USD correction. It's really pushed the USD down hard to close to a key institutional level from our point of view. So let me just draw the level in. There it is. You can see why I've drawn the level, come through it here, that big blue trying to get back through. The hammer can't, down, can't get through, down, up, through, hold, up, nearly to the level, back, up, and now the correction down. We're outside the outer Bollinger Band, in our view, very oversold. The dollar now, in our view, should move to the upside, and we can see also that tail there lines up with that tail. In fact, I can take it across to those three blues. So that is minor support. Major support is obviously behind. Reverse trajectory, probably don't need it, but I'll just draw it in anyway. Come back through the close of Friday. Really aggressive move down. High volatility candles. We've got low volatility candle today, held nearby support. I think the selling is now exhausted, and we just need some confirmation to get long. Confirmation will be here through the 23 level. So aggressive entry again. We move up, we move back within the outer Bollinger Band. We've got tight stop. How far are we going to go? Well, we're dollar bullish, so we're going to say we should go back up to chart highs, but obviously we'll play it as it goes. But if we're right and the selling has exhausted, we would expect the recoil to be quite aggressive. So for us, another good risk to reward trade setup. And so is the last one as well, which we're going to go to now, which is USDSGD. Right, USDSGD daily chart. We've featured this one in a few videos as well. Originally came in above the 136 level. Nice profit, stopped out. Tried to rebuy as we accumulated down here. Got stopped out with nothing. And then she's run on to the downside. She's run back to the same level that became bullish of the USD back in July. And it's going to be a tough level to take out in our view. There it is. Yeah, it's quite a nice red candle in terms of size, but we're outside of the outer Bollinger Band and just hanging around. Won't be able to take out the 136 level. There's, yeah, the selling of the USD is going to dry up here in our view. This is a big supply and demand level. But we need some confirmation it's going to hold. Tail, tail, body. Trajectory. So just come back in, okay, through the level. Then your stop needs to be well back from 136, okay. So clear of the round number turbulence, okay. So I think that level will be okay to have your stop behind. Then if she comes through back within the outer, we'd be looking for a move back to 139. Longer term, if we do turn back up, we think we could go to 144. Dollar just very oversold outside of an outer Bollinger Band. Yeah, basically holding above a key supply and demand level. Just buy with an aggressive entry. If we go through 136, yeah, decisively, we'll just reset our entry at a lower level. In terms of this pair, the SGD's, yeah, dollar's generally corrected, but the SGD has had a bit of a boost, so to speak, from US-China trade talks. There's a lot of optimism about they're going to reach an agreement. That's obviously bullish for the Singapore dollar, but we think they're a long way from an agreement. The optimism is in the price. We're at a key level. We'll buy strength. I'll update these pairs at the weekend and I'll see how they went. But all three look good to us, and we're looking for the dollar to bounce back. But for now, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.